All right, teammates, let's get into it again. I'm just gonna keep testing with you, giving you the answers till we get 1,000 licensed agents, and we're gonna keep and grow from there. All right, everyone in our organization, this is obviously gonna benefit you, and we're putting this out here on our YouTube channel, so anybody in the whole world can use it too. All right, I'll jump in and do the first one, and then we'll rotate. Number one, an insured pays $1,200 annually for her life insurance premium. The insured applies this year's $300 worth of accumulated dividends to the next year's premium, thus reducing it to $900. What option does this describe? So, obviously that's an easy one, reduction of premium. All right, taking it another level further, do you guys know what the acronym is for all of the dividend options?
Correct. REC?
No. The dividend, REC though, is a non-forfeiture option acronym. We can discuss that because we're going to get one of them questions in a minute. It's 3 acronyms, and I hope you guys are writing this down. It's 3 acronyms you got to remember for sure. There's REC, R-E-C, that's the acronym for non-forfeiture options.
CRAPO?
That's it. CRAPO is the acronym for dividend options, and CLIF is the acronym for settlement options. All right, write that down because I'm going to ask y'all that again back when the question comes up. So REC, R-E-C, CRAPO, C-A-R-P-O, and CLIF, C-L-I-F-F. So non-forfeiture options, the REC is reduced paid up, E is extended term, and C is cash. The dividend options, the C is always cash, baby, cash. The R is reduction of premium. That's what we're looking at right now. The A is accumulated interest. The P is paid up addition. And the O is 1-year term. CLIF, the C is cash. These are the settlement options. The L is life income. The I is interest only. The F is fixed amount. And the other F is fixed period. You guys there?
Yeah.
So literally every one of them daggum options are going to be on this test. So there's 1, 2, 3 non-forfeiture. 4, 5, 6, 7, 8 is the the dividends. 9, 10, 11, 12, 13 is the settlement option. There's 13 questions minimum right there. That ain't counting. They're going to just ask you generally what each one of them are. So those 3 acronyms is probably right at a quarter for sure, and maybe a third of the whole test.
Yeah.
You got it?
Yeah.
So you can't be guessing these. You got to know them. All right, next question. Amir, you ready?
Okay. Who pays the annual agent appointment fee? The insurer.
Perfect. To sell variable life insurance policies, an agent must receive all of the following except. So which one of these do they not need?
A.
A.
It would be A or D.
The answer is D.
So they need a FINRA registration.
Right. FINRA, don't give me the...
In the video. the video went right off when you explaining variable.
Right. FINRA, let's check this out. FINRA replaced the SEC. You got it? So the FINRA replaced the SEC. So FINRA is the answer. You do have to be registered with FINRA. But you ain't no, SEC is no. Got it?
Okay.
So I guess they want to make sure you know that. Ain't no such thing as SEC. It might be, but it don't regulate us no more. FINRA regulates all of the securities license people. Got it?
Yeah.
So basically, a securities license and a FINRA registration is the same thing.
Okay.
Okay, come in.
Corporation is the owner and beneficiary of the key person life policy. If the corporation collects the policy benefit, then the benefit is received tax-free.
Yeah.
All right. Benefit received tax-free.
Which component?
You can, Kyle, you can do that one. Read it out loud.
Which component increases in the increasing term insurance? Okay, so increasing is the level premium, the death benefit.
When the breadwinner that is insured by a family policy dies, what rights are provided to other family members that are covered under the policy? B, they can convert that cover to permanent life without ever insurability. I'm it.
Which of the following is not a characteristic of variable annuities?
Yes, value is adjusted for inflation. Guaranteed B.
Okay, let him answer.
Okay.
It is B.
That's right. Okay, Kyle.
If a settlement option is not chosen by the policy owner or the beneficiary, which option will be used? Fixed amount, lump sum, life income, fixed period. I really don't know this one.
All right, let's talk about it. 9 times out of 10, when settlement option, means somebody died, right?
Yeah.
So let's say
Would it be lump sum?
exactly the answer is lump sum.
Okay, that makes sense. I was thinking because on non-forfeit, they would choose extended. So I was like, I was confused a little bit. But like, wouldn't they just get it? But
right.
they had the option.
Yeah. Don't confuse. That's good. That's why we gotta have these sessions. You gotta write out every day because it's easy to get those options. Those is called provisions. Get those provisions kind of confused and mixed up. So you were thinking about an extended term. I mean, a non-forfeiture option, which is extended term, confusing this with a settlement option. It's two different things. You got to know that REC, CRAPO, and CLEF separately. because the beneficiary gonna get a check, and a check in cash and lump sums are the same.
Okay.
Okay, next.
Which of the following, when attached to a permanent life insurance policy, allows the policy owner to customize the policy to provide an additional amount of temporary insurance on the insured, or allows amounts of temporary insurance to cover other family members?
Guarantee.
So, it's guaranteed insurability, or
That's the one I'm saying too. Well, I think it is too.
Nope.
or term rider?
The answer is term rider.
I never heard of that, Ron.
All right, well, let's say this.
It was
This
I
is
had a question like this on my test.
listen to this. This is you got to know how to match the terms up. If you see term, their words are like synonymous, they're interchangeable. Term and temporary are interchangeable. If you see if the question says term, the answer gonna be temporary. If the question says temporary, the answer gonna be term. You can write that on a flashcard. Term on one side, temporary on the other. Whole life is permanent. If the question says whole life, the answer gonna be permanent. If the question asks you about permanent insurance, the answer gonna be whole life. The same thing with universal. Universal and flexible are the same thing. If the question says universal, the answer is flexible, and vice versa. So, let me read that question out loud to me.
Which of the following, when attached to a permanent life insurance policy, allows the policy owner to customize the policy to provide an additional amount of temporary
Start right there.
insurance?
Start right there. How long did it take you to read that?
Not long.
All right, 7 seconds.
Yeah.
That's how long it should have took you to answer this question. As soon as you hit that word right there, temporary, click term rider, and you ain't even got to read the rest of them.
Okay.
Term temporary, whole life is permanent, universal is flexible, modified is move once. Those words, I got them on that video all day. And once again, if you see it, hear it, and write it every day for a week, ain't no way you won't remember that. Okay, Kai.
How long does a North Carolina agent have to notify the Department of Insurance in the event of change of registry agents? 10 days?
That's right. What is another term for an interest-sensitive whole life? Interest-sensitive and current assumption is interchangeable. You hear that?
Yeah.
Write that down on your paper. Term, temporary. Whole life, permanent. Universal, flexible. Interest sensitive, current assumption. Every time. Got it? All right, whose go is it? Next.
All of the following would be considered rebating except B. Wait, yeah.
B is line to replace, right? You know that's twisting.
Twisting.
All right. Kai.
The form of life annuity which pays benefits throughout the lifetime of annuitant and also guarantees payment for the minimum number of years is called joint life annuity. No. It's not A, it's not B. Life with income refund, that's when they pay it out. They pay them and then they pay out the full. It would be, yeah, it would be B. They pay it out until it's met. It can't be a refund because they ain't say nothing about a refund.
Yeah, you're right. You ain't gotta second guess yourself. Read it again.
The form of life annuity which pays benefits throughout the lifetime of the annuitant and also guarantees payment for a minimum number of years is called.
Right. A minimum number of years. Isn't it the same way of saying certain, a period certain?
Yeah, it really is.
A minimum number of years is a period. That's it, bro. B. Once you get it, whatever your gut tell you first, pick that. Don't second guess it.
Okay.
In case of a loss, the indemnity provision insurance policy pays as much as 95% of the loss.
B.
Right, that's B. Okay, let me.
The annuity owner dies while the annuity is still in accumulation stage. Which of the following is true? It would be A if I'm not mistaken.
No. Keep reading.
No?
Keep reading.
Okay. No.
The reason why A is not true is because the money only goes to your estate if you don't have a beneficiary. But keep reading.
Okay. Then D.
Would you say the answer is?
D.
Exactly. Next.
Contracts that are prepared by one party and submitted to the other party on a take it or leave it basis are classified as is it C?
So that sign's coming in at.
No. The answer is
D.
B as in boy.
I knew it was one or the other.
So adhesion, the root word of adhesion is to adhere. Adhere means, I don't know, adhere means to stick to something, I guess, but either way,
So like take it or leave it.
adhere is you gotta adhere. You don't have no options. There is no other options. Take it or leave it. Got it? I gotta say stuff to make it easy for me to remember. So if a person has to adhere to something, that means they have to take it or leave it. Aleatory is got an exchange of unequal values. That's a whole nother. You need to know that too. The nature of insurance is there could be an exchange of unequal values. Like all these questions right here, y'all knock them out, bam, 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 you get your license, we'll be done with this. All right, whose go is it?
It's mine. When a license is accused of any act, omission, or misconduct that would subject the license to a license suspension or revocation with the approval of the commissioner, the license may be surrendered for a period of 1 year. Isn't it 1 year? The dates are good. I think it's 1 year though.
All right, I don't know. You got to read them regulations on your own. I'm not good at them regulations. Y'all need to, look, if you do this, do my system, hear it, see it, write it every day, plus you read them regulations, because on my videos, I'm not discussing regulations.
I don't have my book in here with me.
Okay, maybe surrender.
I want to say it's a year.
Right, but once again, that's
a year. It could be 6 months to a year.
But that's why I like taking the practice test, because when we get to the end, it's going to give us the right answer if we wrong, and then just write it down, and that way we ain't got to miss it again. I'll add that to my notes and rewrite it. All right, next.
Which of the following is correct concerning the taxation of premiums in a key person life insurance policy? Is it B? Is it B?
It is B. You're right.
Because the only thing is taxable is interest.
All
Even
right.
the key person, nothing's taxable.
All right, we rolling.
Which of the following is incorrect concerning a non-contributory group plan? Employee receive individual policies.
Oh, D.
Wait a minute. With a group plan, now this is the question I have. With a group plan, there's a master contract, I thought, that the company gets, and I thought that the individuals get a certificate.
Right. So what's the answer?
So the answer would be A.
Exactly. Next.
Which of the following is not one of the required qualifications for licensing as an insurance agent in this state? A.
All right. Next.
Which of the following is true about a policy assignment? Okay. I'm trying to shoot a phone call.
C?
Nope.
So D.
The answer is C.
Okay.
I mean, no,
That's-
C. No, C is correct. If you change the owner, then you can't change the beneficiary. But that ain't the answer to this question.
It's A.
The answer is A. You just transferring ownership of the policy when you do an assignment. You can do that. That's one of the rights of the owner. You can have an agent modify the policy. You can do that too. But it transfers all the rights from one owner to another. Got it?
Yes, sir.
All right.
Gotcha.
Next.
According to the entire contract provision, what document must be made part of the insurance policy? Copy of the original application, buyer's guide, agent report, outline of coverage. Well, shoot. Which document must be made part of the insurance policy?
So this would be the answer is copy of the original application.
Yeah, that's confusing because all of this technically will be inside of it. So
right, but they want you to, when you taking these tests, you gotta know what are they looking for? What do they want to make sure I know? They want to make sure you know that if you get a policy, a copy of your application is in that policy. So you need to have a flashcard, and on one side put entire contract, on the other side you put copy of the original application. It's a memory game. This goes together. Entire contract, copy of original application goes together. You got to know they go together. The same as term is temporary, same as whole life is permanent, the same as universal flexible, the same as interest sensitive current assumption. All you got to do, you got to be able to match these. You got to be able to match these words up. Some of this stuff is you got to understand the concept, but most of it is just word matching. Next.
For variable products, underlying assets must be kept in a separate account.
That's it. And fixed products are general account, right?
So fixed products.
Go to the general account. That's another little word game. Just match it up. Variable products, the money is invested in separate account. Fixed products, money is invested in general account. Goes together. All right, next.
what type of premium do both universal life and variable universal life policy have? Oh, I know this one because it was on your thing. When I looked at it last night, term to perm, whole life and increasing, whole life and I'm gonna go with. Yeah, I'm gonna have to choose A, decreasing.
No.
Universal life is ART, cash, right?
Right. ART, the premium change goes up every year. You remember earlier I said.
So that's.
You remember earlier I said.
Was flexible.
Bam, that's flexible. You remember I said those words are interchangeable. You gotta know this. That's gonna be on the test that shows my name is Chris Durham. Term is temporary. Whole life is permanent. Universal is flexible. Right there.
What was the thing that you said in the video where it was like two of them is whole life and increasing and the other one was whole life and decreasing?
Right. There's a family maintenance. That's family maintenance and family income.
Okay, I got those mixed up.
Right. Right. Let's start right here and y'all write that down. Term/temporary. Whole life/permanent. Universal life/flexible. Interest sensitive/current assumption. Separate account, variable. Fixed account, general. I mean, them words you gotta write. But once again, it's repetition. If you do that, if you write that down every day for a week and watch it and hear it, ain't no way you would miss this question. This is the easiest question you're gonna see on the test. Universal, flexible. Got it?
Sir, now which one of them are also known as unbundled?
Universal.
Okay, now that's on the test.
That's on the test. So, see, some of these words they're interchangeable. The insurance company make it sound the insurance industry make it sound complicated, but they're saying the same thing. They're just saying it differently, right? So, universal life is annual renewable term and a cash account. The insurance industry calls that unbundled, meaning it's two separate products wrapped basically in the same policy. Then ART, the premium goes up every year, but they can use the cash value to cover the cost of the insurance. So you can skip payments if it's enough cash value. That concept is called, all that is the same stuff, they just call it flexible. I mean, it may sound confusing the first time you hear it. I've been doing it forever. But if you do it every day for a week, you're going to get it.
Okay.
All right, next.
Who's good? I'll read it. Which of the following terms describe making false statements about financial condition of false statements? Twisting.
No, we just talked about twisting. It was earlier. Twisting was lying to get somebody to replace their policy.
Oh, okay, that's right. Okay, let me keep going. False statements are intended to injure any person engaged in business or insurance. So, defamation.
Yep. Kai.
Which of the following is not true regarding the no intent? The no intent life space is taken into consideration for the annuity. The annuity receives the annuity benefit, that's true. The annuity must be a natural person, that's true. The annuity cannot be the same person as the annuity. The annuity life expectancy is taken into consideration. So it's D.
That's right. The annuitant and the owner can be the same person. In most cases, it is. All right.
Which type of misrepresentation persuades an insured to his or her detriment to cancel, lapse, or switch policies from one to another? Rebating. No, not rebating. Twisting.
Bam. Next.
Under a simple plan, which of the following is true regarding taxation on both contributions and earnings? Is it A?
I think from that workbook it's C, but I think from the class they said simple plan.
The answer is B.
Yeah, I knew it wasn't taxed at all.
It's
They
tax.
be picking up.
It's tax deferred until you withdraw it, just like a 401k or an IRA or money in an annuity. Just as long as it's in the account, you don't pay no taxes on it. You only pay taxes when you withdraw it. All right, next.
A man decided to purchase a $100,000 annual renewable term life policy to provide additional protection until his children finish college. He discovered that his policy B.
Yep. Next.
Whenever an insurer knows that a person has violated either fraudulent claims or embezzlement provision, it is the insurer's duty to notify which of the following. D.
No, I think it's the insurance commissioner.
They don't notify the commissioner. They
Right.
don't notify the attorney general. Yeah.
What'd you say? You said D?
Yeah.
Oh, good. All right, perfect.
If the policy owner, the insured, and their beneficiary under a life insurance policy are three different people, who has the ownership rights? The policy owner.
All right, next.
In increasing and decreasing term policy, which policy component fluctuates during the policy term? The death benefit.
All right, next.
A business owner was trying to obtain a bank loan to fund the purchase of a new business facility, but the bank required proof of additional assets to secure the loan. The business owner then decided to use her $250,000 life insurance policy to secure the loan, which provision makes this product possible. Collateral assignment.
All right, next.
Life income, joint and survivor settlement, option guarantees, income between or more recipients till they die. And yeah, A.
An insured with a life insurance policy is diagnosed with terminal illness, which of the following is a suitable option for the insured? A viable settlement.
All right, next.
One of the advantages of a family life insurance policy that provides coverage for children is that it allows the spouse extra coverage for every child covered, allows the income the children make it to be known, may be converted to permanent life insurance for children without the requirement. Is it D?
What'd you say the answer is?
D.
No, man.
They be converted from permanent. It can be converted from permanent. If you go from perm to term, you don't have to do insurability, or do you?
Right. So what's the answer?
See,
You gotta know that, man. Family policies, the spouse and the children can convert without evidence of insurability. Conversion is term to perm. Next.
all of the following are non-forfeiture options except dues paid, interest only.
Next.
Which of the following types of policies allows for a flexible premium and a variable investment component? So I would just say a variable whole life insurance. No, variable. Flexible premium, we said that was universal life earlier.
Right.
And a variable investment component.
All right. So what's the answer?
I'm gonna go with A.
You would be right, young man. Don't second guess that. Flexible is universal go together. This is word matching.
Okay.
Perfect.
An insured had a $10,000 term life policy. The annual premium of $200 was due on February 1st. However, the insured failed to pay the premium. He died on February 28th. How much would the beneficiary receive from the policy? C, $9,800.
Next.
Which of the following best describes annual renewable term?
Did we lose Kyle?
I think he might be with his customer.
Okay.
Oh no, I'm here. I was just listening. Yeah, he was just answering
okay.
fast. I was just like, okay.
Oh, no, I thought you had, because I didn't hear you. I thought maybe you was with your customer.
Yeah,
No, it's fine.
I'll let you do about 5 of them.
Which of the following best describes annual renewable term insurance? Neither the premium nor death benefit affected by insurance age provides an increase in death benefit. It requires proof of insurability. Each year is level term policy insurance. A.
All right, next.
What license are required to sell variable? A. Well, no. C. Both life and security.
All right, next.
Under the L and H Guarantee Association, the maximum benefit one contract holder may receive in benefits regardless of the number of contract held is. Hold on.
Now, I heard like on the state exam, they get a question like this, they want the answer to be like 300,000, but on here, it's like C.
No, it is the maximum benefit one contract holder may receive in benefits regardless of the number of contracts held. I think that's $1 million. It's $300,000 for one contract, but it's if you got regardless of the number of contracts, it's $1 million. You see what I'm saying?
Okay.
So if you got 10 policies, $300,000 each, that's $3 million. Is that so? They'll pay you up to $1 million. But if you got one policy that's $500,000, they're just gonna pay you up to $300,000 on that one.
Okay.
So I want to say it's $300,000 per policy, up to $1 million, regardless of the number of policies. I don't think it's $5 million. It might be $5 million. But
I think it's somewhere that it is 5 million because I don't know, that question, it seems too familiar with
Yeah,
I've
seen all three of those numbers.
I think because on the state, I don't think either none of those numbers but 5 million was on there. Like, that's so confusing.
I can't remember right off the top of my head, but I know I've seen those numbers.
I can see it being $1 million. I don't know why I keep putting 5 million. Honest with you.
all right, well, let's go with $1 million. It'll tell us if we wrong.
Which of the following is not true about a joint and survivor annuity benefit option? This option guarantees income from 2 or more. That's correct. The surviving annuitant may receive reduced payments. I don't know about that. Payments stop at the first death among the annuitants. A period certain option may be included. It will have to be C. Because it will stop after the last death, not the first death.
What's the answer?
C.
What'd you say, D?
C,
yeah, the answer is C. Because joint and survivor is both people gotta die, not the first one. All right, next.
when must insurable interest exist in a life insurance policy? At the time of application. D.
All right.
The automatic premium loan provision is activated at the end of the.
It had to be grace period.
Or free look. Wouldn't it be the free look?
It would be C or D, I believe. Because it will pay the premium. I think. The free look period is like after the application.
Yeah, that's
so that can't be it. There ain't no such thing as an elimination period.
Right. Policy period.
I've never heard of policy period either.
I've never heard of that. So you're either between A and D. That's the only two real things you got. And then so
it has to be
it's
D.
Probably
period.
D.
Yeah.
D. Grace period. All right.
Which of the following statements is not true concerning insurable interest as it applies to life insurance? Business partners have an insurable interest in each other. That's true. Wife and husband has true interest in their spouse. Okay. The individual has an insurable interest in his own life, I guess. This is a tricky question because I can see insurable interest in all of these, but I would have to go with C or D. I would pick C.
Nope.
D?
The answer is D. Why is the answer D?
I'm not sure because
If
I
a
thought
debtor has an insurable interest in the life of a lender.
oh that's wrong because it's not the life of the lender. It would just be the
Yeah,
loan they pay back.
right. They got it flipped. It should be opposite. A lender has an insurable interest in the life of the debtor. So they playing a word game. They're trying to confuse you. You see that?
Yeah.
A debtor don't have no insurable interest in the life of the person they borrowed the money from. The lender has an insurable interest in the person that borrowed the money.
Yeah. Okay.
All right, next.
The young father would like a life insurance policy to provide coverage for all 5 family members at the lowest cost. Which type of policy would he most likely buy? Family protection.
How is the commissioner of insurance selected in the office? We selected, so appointed by governor, no. Appointed general, no. Elected by authorized insurers, A. Elected in a general election for a 4-year term.
Which of the following types of policies allow the policy owner to skip premium payments, provided that there is enough cash value in the policy to cover premium amounts?
Uh-oh.
Okay. I mean, all these they got cash with them, right? So, I'm just gonna go with we'll go with universal life because we said earlier that it was flexible.
Exactly, you would be right. Next.
According to the non-forfeit law, if the owner decides to surrender a deferred annuity prior to annuitization, the owner is entitled to which of the following? D.
No. The answer is A.
Because it's just worded funny, right? Because guaranteed surrender value means they would have to pay a surrender fee, right?
Right, exactly. And you see, they got the same word. It said decide to surrender, guaranteed surrender. If you surrender that annuity, all you're going to get is the surrender value.
A straight line policy has what type of premium?
Oh, shoot.
Is D.
regulation of the insurance industry primarily rests with private insurers, the federal government, the state, or the National Association of Insurers. I would say, man, A.
No, it's the state.
I knew it was either A or B.
The State Department of Insurance. The NAIC just help you keep your paperwork straight for keeping your licenses organized in different states. The state is the one that's regulating you if you get in trouble or investigating companies and blah, blah, blah. The State Department of Insurance. It don't say Department of Insurance, but that's what they mean. Each state has their own Department of Insurance.
The policy owner specifies a dollar amount in which installments are to be paid. She has chosen which settlement option, fixed amount.
Yep. Next.
Which of the following terms is used to describe a person other than a buyer that enters into and effectuate a vehicle settlement contract? Yeah, I'm gonna need help with this one. I'm not good with the vehicle settlements.
Isn't it either it's either C or D, isn't it? I would say it's D. If they using two and fluctuates the value of certain contract, person, wait a minute, describe.
I don't know. I think it's either. I think it's
the broker,
the effectuator or the provider. I don't think it's broker.
Okay.
Effectuator sound like a word they done made up. Let's go with provider. It ain't the purchaser. The viator is the purchaser.
Right. So it would be the provider.
All right, let's go with that. Next.
Which insurance principle states that if a policy allows for greater compensation than the financial loss incurred, the insured may only receive benefits for the amount loss indemnity? A.
All right, next.